80 trillion yen, or $127 billion. That's the extra money the Bank of Japan is pumping into government bond purchases in a surprise round of monetary easing. Market reaction generally positive so far. Let's get to Reuters' Tara Joseph in Hong Kong, who has the story. Doubling its usual asset purchases in response to the slowdown, right, Tara?
That's right, Axel. As you said, a surprise at the amount today, double the amount expected, and also coming a month earlier than many market players had expected. Markets very cheered on the back of this. Also a sense that the BOJ is recognizing that the economy or economic growth has paused when things looked cheerier earlier this year. We've seen the Nikkei up at 4-month highs. We're also getting a boost here in Hong Kong, the Hang Seng Index up, and the yen also lower on the back of this announcement.
All right, quick word from you, Tara, on the China-Japan dispute, and what's the latest there?
Well, it is quieter in the streets of China today after all those protests we had. But tension is still very, very high. This issue is not going away. The news really today is around Leon Panetta, the U.S. Defense Secretary who's visiting Beijing. He's there to assure leader-in-waiting Xi Jinping and other senior officials that the U.S. presence, even though bigger, is partly because they want a better and bigger relationship with China. But critics in China are saying that the increased U.S. presence is really around making other countries bolder in the region, particularly Japan. And of course, Panetta was in Japan before he went to Beijing. This is going to continue for a while. Tensions remain high. Back to you, Axel.
Tara, many thanks. Here in Europe, France's socialist-led government is preparing to push through the new EU pact on budget discipline. Spanish bonds also hovering near 6% as investors pile the pressure on Madrid to seek a full bailout. And how will the BOJ's easing impact the Eurozone? Let's get to Tom Elliott, global strategist, JP Morgan Asset Management. Morning to you, Tom. I would imagine a further boost for equities on the back of this BOJ move.
Yes, it's yet more cheap money coming from global central banks. And if you imagine the analogy of the hot potato, the money gets passed from one institution to another, perhaps to a bank that is selling its bonds to the central bank. It gets cash. It lends that cash on to an investor who buys equities. The person who sold equities buys commodities. Prices go up all along the line, pushing up at the end of the day what we call risk assets. The headache, though, if you like, is on the currency side, because whenever a central bank does this, their currency tends to weaken. Indeed, some argue that this is sometimes the objective. And then you enter into a beggar-thy-neighbour currency war, basically.
How long do you think the pro-risk trade can continue?
Well, indefinitely, because central banks can indefinitely create money. And Bernanke's promised to hold interest rates down at least till 2015. We know that QE3 is unlimited. The ECB's OMT program is also unlimited. I should add the Fed's is 40 billion a month, but there's no time limit. So there is a sense that the printing presses are just going to run and run and run. I mean, to some, the danger is that this causes inflation at the end of the day. Others argue, look, there's so much debt that needs to be covered over, if you like. The banks need to hold on to cash in order to rebuild their balance sheets. The growth is so weak, so there's not much fear of inflation. So we don't need to worry about it. But it's understandable why gold has reacted positively in recent weeks.
Just very quickly, Tom, Reuters has a feature out this morning saying that Germany's biggest worry is certainly China, not Greece. Would you agree with that?
China is by far the largest contributor to global growth. Its economy is much smaller than that of the US, but because it's growing at such a pace, it has more of an impact on overall global demand. And a slowdown in China is bad for the world. So in that sense, yes, I think there's another way of reading that, and maybe I'm being a bit cynical here, but it's also another way for the Germans to say, look, we really have changed our views on Greece. Greece is a part of the euro. It's here to stay, and it's no longer the big headache. It's a headache, but it's not the big headache that we were claiming it was last November.
All right. Many thanks, Tom.
Cheers.
Top world news story on Reuters this morning. Striking platinum miners at Lonmin's Marikana facility in South Africa accept a hefty pay rise and agree to return to work. The 22% offer should end 6 weeks of violent unrest, which have seen 45 killed and rattled Africa's largest economy. Barack Obama hits back at the Mitt Romney campaign in a row over a secretly recorded video. The film shows the Republican candidate apparently dismissing nearly half of America's voters as victims who are too dependent on government.
My expectation is that if you want to be president, you got to work for everybody, not just for some.
Corporate headlines. Dutch brewer Heineken moves closer to winning control of Tiger Beer after hatching a pact with Thai investors. Shares in once bankrupt Japan Airlines up a modest 1% on their return to market as investors choose to lock in profits on the $8.5 billion IPO, and the German government urging people to steer clear for the time being of Microsoft's Internet Explorer. The software giant admits a bug yet to be fixed in the web browser makes PCs vulnerable to hacker attacks. That is it for this morning. Our pick of the day shows Real Madrid's Cristiano Ronaldo celebrating scoring the winning goal against Man City in the Champions League at the Bernabeu. The British side twice lost the lead and went down 3-2 as Real staged a thrilling comeback. We'll see you tomorrow. I'm Axel Threlfall. This is Reuters.